Matthew, are we ready to go now?
We are definitely all set.
No. I've got to tell everybody this. For those of you who don't know and who think Matthew is a sort of absolute podcast pro, this is take two, because just 30 seconds into take one, his PC ran out of battery. So I just want everyone to know that, behind the facade, there's a man who can occasionally slip up.
At least I had the sort of foresight to start the recording going. I was really delighted you picked up the mantle to do the podcasting for a change until I learned that you hadn't actually turned the recording on for your excellent interview. Well, the hint was in the title. Robin and I are back with another Partners Chat. And if you're listening to us on the day this is going to be released, that'll be Sunday, 27th of December, then chances are, I guess, you're into your third day of post-Christmas stupor. So whether you are like David out for a run on your bike or like Nigel doing your ironing, welcome back. Or if you're just looking for a chance to drift off and a little snooze with us plugged into your ears, well, we don't mind that either. But welcome back. And of course, if this is the first episode you're listening to, then this is slightly different from our normal episodes. Most of the time, I'm talking to the leaders and influencers in industry. But now and again, Rob and I like to have a chat. And if we can find Paolo, bring him in and together mull over what we're seeing in the world around us. This week, just Robin and I. Last time I heard from Paolo, he was stuck on the phone to Santander, trying to add some details to our business account. Tell you if you think insurance has got problems with customer service, try phoning your bank. But with that, let's get back to Robin and I. Robin, what have you been up to today? I guess you're a great person to talk to about pet insurance, as you've now got a new puppy.
I've been looking at insurances generally, trying to be as insurtech friendly as possible. So the new dog, we're going to look for we're talking to Bought by Many to get that one insured, I think. And then I've taken Cora, which I particularly like. All the kids have got Cora, and Cora's already saved some money because Cora notified my son that his MOT was due. So that one's ahead. And now, all point call to anyone who can insure my cottage, which remains empty most of the years, and no one seems to want to insure it very much. I
think we're going to expand our stretch this coming year. We're going to move into movies, and we're going to call it Insuring the Uninsurable. We managed to move from live events into digital events quite successfully. So I really feel we should be taking it to the next level, and we can add your cottage to my tractor. And didn't you talk to somebody that had a big, was it a rig or a mobile home that they were driving around the States and couldn't get insurance for?
It was £350,000 worth of mobile homes currently stranded in Uruguay. They were doing a world tour and they can't get it back, and it's uninsured, sitting in an eco farm somewhere outside of, I don't know, Quito. No, that's in Ecuador. Anyway, you've been looking at your insurances.
I have, actually. And so on the pet one, I just came across an interesting article in the FT that said somebody had an £8,000 bill for their dog. And it just reminds me when I was living in the country and our dog had swallowed something and we took it to the vet, and he said, well, it's going to cost you £500 to operate on this, but for £50, I'll put the dog down. What would you prefer? Good sort of country vet's approach to animals, but I'm pleased to say that we actually paid the money and operated, but we kind of self-insure for dogs, other pets. And Stephen Mendel, who runs Bought by Many, he got himself a customer, but perhaps not at the level of some people are paying. And he said, the minimum you should do, and it's actually very true for a dog, is get liability insurance in case it runs out in the road and causes an accident. So yeah, we've actually got our pet insurance down to £9 a year for the dog. But I guess that kind of annual review of expenditure, I was just looking to see what we spend on insurance. And as you said, just sort of kind of insurtech lens through it and realized that the Grant household net income, about 10%, is spent on insurance across 12 different insurance companies. And I'm sure there's overlap. I did some quick online checking on our policies and found that we could get both the household policy and the motor policy separately at 25% of what we've been charged. So, I think for all the sort of wonderful things happening in the insurtech world, there's still some massive opportunities out there if we're getting better prices just by going and backing and getting repricing. I'm not quite sure that's a vindication or a validation of things changing, or it's just the fact that we're all maybe not active enough to shop around. But it's quite revealing in terms of the potential cost savings.
No, I always think motor is quite advanced in all this stuff, but the only policy that I can get that automatically insures me and my kids sort of swap the car around as when we need it is still a 4-figure sum, and the policy arrives in the post. And at some point 2 months ago, they triumphantly announced that I would now be able to do some of the things that I've had to do on the phone digitally. I can't help thinking that sort of stuff is driven not by the need to please customers necessarily, but by COVID and the inability to actually operate in the last. Have I just broken our golden rule?
You have, haven't you? We did agree that there's going to be a £10 fine for any mention of COVID in a negative context. So I'll give you a chance to backtrack quickly and put a positive spin on it. Otherwise, you've got £10 in the kitty.
I'll pay the 10. We should actually, to the main business, look at InsTech London this year, and what were the big sort of themes and influences on us, do you think? And don't mention the word.
Well, I guess what worked well for us, wasn't it, is that we moved from having some great bunch of friends, new friends and old friends, once a month getting together and seeing people and being able to maintain the community digitally and grow it, and actually had some wonderful events with some great supporters. And we're getting, I think the best one we had was 650 people to one of our events. So I wouldn't like to say we thrived in the recent period, but we certainly survived, and I think come through stronger.
I go further than that. I think that there was a good segment of our community who saw sole value in what we do as the networking and the ability to come down to the steel yard of a Monday night and share a glass of wine with like-minded enthusiasts. But the fact that we're still signing members and the fact that we still have a strong following suggests that people see value in what they see and what they hear and the quality of the content as much as in the networking, because we've maintained strong support even though there's no networking opportunity. So we must have something else other than the ability to have a glass of wine with somebody.
Yeah, I mean, and actually, there's no doubt. When you stand on stage or sit on stage and have to talk to people, and you translate it to a digital world, it does help in just terms of being able to deal with all of the wrinkles and bumps in the road of doing live broadcasting, which is can always be challenging. Did you have any other, apart from not turning the device on to record, any other experiences from our events you're willing to share, or should they all just be buried and forgotten?
Not really. I mean, there's a limit to how much one could reveal about one of those known inadequacies in these things. I did do my very first podcast, though. It hasn't come out yet, so you can't judge it. But I'm moving gradually into your world. And I would say that the podcasts and how the uptake of the podcast and how it's enabled us to pick up a global audience would be one of my absolutely big highlights and themes from 2021. Which, well done you. So I think part of what we want to discuss today is our analysis of 2000 and InsTech London, and to try and do it in a way that doesn't mention our banned word. What do you see as the big themes?
What we're doing is not just about getting people together in an evening, and there's some great discussions that happened over a glass of wine, and we had some great speakers, but we've really drilled down into finding content. And with so much information out there, I think it's difficult, and I think it's partly what we've proved, difficult for all types of organizations, whether they're large insurance organizations looking for partners or technologies looking to get their word out. How do you really stand out with all the noise going on? And I guess you and I have got the benefit of being around for a while. We've got no one else to answer to but ourselves, and we can sort of call it as it is. And I think what we've seen is a natural progression from doing live events that we recorded to actually creating a lot more content and organizing it, and people are actually valuing that and asking us for more of that.
My other highlight would be our move into reports. You've become a world authority on parametric insurance, and you report down very well. I don't know whether you've got any stats for us, but I think that was a move that worked for us. Yeah,
no, what was to prove that concept really, which is there's a lot of words out there and ideas, and but people don't always know how they all fit together in terms of the history. I mean, interesting about parametric insurance, it's been around for about 20 years. There have been some, there's been like hundreds of millions of dollars on individual transactions, such as the New York Metropolitan Transit Authority for doing a flood bond post Hurricane Sandy. Really, really big. But there have been some challenges, and it's great to see all the new themes coming through. There's a piece which we can talk a bit more about from our predictions event earlier this week, where the feedback is that insurance itself, or insurers, have lost a bit of trust with what's been happening this year and not paying out on some of the business interruption claims. Whether that's legitimate or not, the point is that people don't trust them anymore, and parametrics are going to be seen as a much more reliable source of payment because it's defined on a pure trigger. So I think there's a number, like often there's the case, a number of things moving ahead, and that just tapped into an interest. We had we didn't quite blow up our servers, but we had 1,000 people downloading that report in the first week, and very great thanks to Global Parametrics for sponsoring what was also one of our most successful events. And I know, Robin, you are hard at work on your e-placing platforms report that's going to be coming out very soon, we hope. How's that getting on?
Well, if I didn't have to keep coming doing podcasts with you, I'd get on and write the thing. But it's going on well. I mean, the catalyst for it was Lloyd's Blueprint 2 and their decision that they wouldn't build, one huge utility in the hope that everybody would come, and that they would encourage something of a free-for-all in the transactional piece, provided that you can hand data off in certain formats and have certain sort of standardized parts of your process. So I thought it was a really good time to have a look at who is in the e-trading space, where we've come from, what we've learnt, what's working, and at some stage, possibly in this report, possibly another one, where we're going, because I think that there's a gradual move away from platforms that just enable brokers and carriers to transact digitally into platforms which bring in the customer, and the customer is involved, from top to bottom, and is part of the technology and the functionality. And I think that one of the biggest things for this year is these things really started to manifest themselves. I mean, that there were a lot of announcements this year which were to that effect.
Yeah, I mean, I think particularly in the sort of commercial specialty London market space, the customer is so rarely mentioned, because I think partly because it's a broker market, and so there's a sort of one degree of separation. We're sort of hearing about it a bit more in the retail space, so we should definitely talk a bit more about that. But you've been quite vociferous and outspoken, and people like that in many ways, not least on the area of platforms. So are you going to go for the jugular in your report? Are we going to sort of see some people in there named and shamed, or are you going to be a bit more softly, I'm not quite sure the written version of softly spoken is, but whatever that is that going to be what we're going to see?
I'll put it this way, it's going through a lot of drafts, because I keep saying I can't say that. No, I think I'm well equipped to look through the history of sort of e-placing over the last 20 years, and we've learned a lot in that period. And I think that what I want to do in this report really is say, look, if we learn from from the experiences of the past, and we take advantage of the extraordinary technology that's now available, which certainly wasn't available to us 20 years ago, and we really do try and understand what the customer wants rather than sit quietly in our own environments and do what we want to do, then we can completely transform this industry. And all around us, you can't hear anything other than people talk about ecosystems or embedded insurance, or you need the technology to play those games. You can't sit on some 1988 policy admin system and play embedded insurance.
Yeah, I know we do. I think we should offer a free version with a redacted report with all the thick black lines in it, and we'll put the real one behind a paywall. It's going to be our new business model.
You're being very naughty now, because over the last 2 years, you've made me behave a lot better than I would have done if left to my own devices. And now you're encouraging me to return to my old ways.
We don't totally want to lose the Robin that we all know. But on the customer side, what's your favorite example, or one of your favorite examples where you've seen that coming to the fore in the last few months?
If I could name one single proposition that I really liked, I would name Cora. I talked about it earlier, but I mean, I sent that to all my children who sent it to their friends, who immediately go, "Well, why didn't we think of that?" I always think there's something very powerful about that, and our core of embedded insurance part of that truly, is in terms of sort of announcements during the year. I go back to my embedded ecosystem theme. I thought the InsTech Munich Re John Lewis Partners announcement of rethinking home insurance for John Lewis customers. That's a tech play again. And in that category, I think from a sort of commercial point of view, yesterday or the day before's announcement of Parcel, the new syndicate, the private-public cooperation involved in putting together something to ensure the world's vaccines using, smart contracts, IoT devices, all the things that I've been banging on for a long time. Even DLT, God bless DLT, is back. They're back. They're all back on the agenda for what looks like to be a really smart solution to a problem that had to be solved and had to be solved quickly. I don't know if you want to comment on this, but I still think the best innovations in insurance are being forced on us, partly by circumstance, and I'm not mentioning the word, but also by external customers saying this is what you have to do, and if you don't do it, then I'm going to do something about it.
No, that last one was what we call a COVID positive one with the Parcel. Transmitting vaccines, but I'm going to fine you another £10 for using acronyms for DLT, for distributed ledger technology, because we don't like to just have acronyms on here. But
everybody knows that one now.
Well, yeah, you say that. But your John Lewis one. So for those who don't know John Lewis, who are not in the UK, I guess it's like a Macy's in the US. So and this is on the theme of embedded insurance. So what was really interesting when I was having my exciting wet Sunday afternoon looking at insurance was, when I bought a laptop from them, because they actually are quite a good place to buy computers, they were offering damage insurance at £40 a year on that, or £80 for 2 years, which is about £3 a week or £3.30 a week. That expires after 2 years. But when I went and looked at what it would cost to buy that through one of the online insurance offerings, it was £25 a month. So it's almost it's like 8 times more expensive to buy the insurance independently of buying it at the point of purchase. So not only do people like John Lewis have the customers, and they're right there at the point of purchase to buy the insurance, they're offering it at a significantly cheaper rate. So that is absolutely going to be the future of insurance. If you go onto Amazon now, I noticed you can they'll offer you insurance with one of the leading insurance companies as you go. So I don't think any insurance company that isn't figuring out how to create partnerships like the Swiss Re and others are doing, or Munich Re, is going to get left well behind.
Oh, for sure. I agree. It was interesting with our predictions. Quite a lot of predictions went along that route. If John Lewis can do it for home insurance, where does that leave someone like Amazon? I mean, it's obvious that they can start to insure products that they sell and provide sort of embedded gadget insurance or whatever happens to be. But John Lewis aren't doing that. And the other one, of course, was IKEA. These are all trusted brands. They all understand data. They're all trying to add additional services to a product set in which they've become established. Daimler and Mobinx and Swiss Re. This is a massive theme. It really is. You selling the insurance at point of sale, and I don't think it just applies to insurance. If the parcel thing is right.
Yeah, well, I do worry with IKEA that it's going to add another 15 minutes to the journey to get to the Billy bookcase, when you're going to have to walk past all the financial products they're offering in there. But I mean, I think also that Amazon one, everyone has been talking about Amazon coming in, and we get it. But it's also, to your point earlier about getting access to your information. If you want to find out what you bought or what your package is with Amazon, you go in, it's right there in front of you. And so just the very fact you can track your policies and see what's happening, and they're just geared up towards that level of customer engagement. And actually that, our predictions event, which we should talk about that in a minute, but it was, I think, the most efficient crowdsourcing of predictions you could do in an hour of 20 brilliant people. But one of the themes that came out from that was that people are going to be, or probably do trust non-insurance brands to sell them insurance more than they do insurance brands to sell them insurance. I mean, that is a big problem for the industry if that's the way people are perceiving who they're going to go and buy their financial protection from.
Well, you asked me not to, beat up on the insurance industry too much, but we haven't done ourselves many favours this year. That I'm convinced that the emergence of parametrics is a reaction to the need to create trust and certainty. We've mentioned Amazon far too many times, but that in an environment where if you buy something that isn't what you wanted or you don't like and you return it, no questions asked, is a brand that creates consumer support, trust, and belief. And if they come out with an insurance product, people will buy it without a moment's hesitation. They'll buy it because they believe. I do worry that this sort of trusted brand meets extraordinary ability to make use of the data, captures the customer, provides much of the value, provides enormous leverage, leaving the insurance industry providing regulated capital to possibly involved in the pricing of the risk, and down at that highly commoditized game, which requires a lot of scale and not much fun. I mean, that would worry me if I was working for a big insurer.
Well, and then you add that to the corporate world where we can talk about some examples where they're realizing that if they're going to buy insurance, they've got big capital themselves to draw upon. I mean, they've been using captives for a while, but it's now becoming a board level decision rather than a risk manager's decision. And then you look at what Chubb is doing, for example, with Chubb Studio, where they're essentially providing a full package for a big corporate that wants to go and sell insurance to just link into their distribution systems. And for the insurers that aren't working with the direction of travel, they're really going to struggle. And Google did a really interesting study a couple of years ago that they presented on, where they demonstrated that if you had the right criteria that people wanted to buy insurance on, in terms of speed of purchase and coverage, they could get 50% of people to go for an unbranded product rather than that they're on the branded product. So I mean, I think all the money that goes on advertising in insurance is going to be wasted if it doesn't deliver and compete with the other people coming in.
So we're coming off the high of our predictions party earlier in the week, which was a great success. You mentioned it earlier. And for those who don't know, we asked 20 of the great and good from the insurance innovation space to give us a suggestion as to what might happen in 2021. Matthew is busy writing an article and taking the highlights of that. What was your favourite prediction? Because we've had some in writing as well as the some we had on the night.
There was an interesting comment that Robert Lumley made from InsurTech Gateway. He sort of turned the question around and back to us in a different way. So he said, what is the direction of travel? The risk of making predictions is, I think you can predict things, but actually things often take more than a year to change. So he was very much, what's already happening and we are going to see making a real difference next year. To me, everyone's been talking about it, but I think we are going to see climate change become much more personal. And it may not happen next year, but I can see this is where we're heading, where particularly if you sort of look at younger generations, are going to be looking at their personal carbon footprint. And we're going to start seeing not just companies, but families wanting to measure their carbon footprint. It's going to move from the kind of Instagram generation about looking great on Instagram to people talking about what their own personal consumption is or carbon consumption is. And so I think that's going to drive a lot of things that are already being driven by things like ESG and environmental, societal governance reporting, and just the increase in risk from climate change. So climate change, but actually from a much more urgent and new set of constituents are going to be making buying decisions increasingly in the years to come. How about you?
I believe in yours. I really do, in the sense that I think it comes from the top and it comes from the bottom. I think that increasingly investors will want to know that insurance companies are ESG friendly and will seek metrics. I see there are companies now starting to provide indices and ratings of the large corporates as to how environmentally friendly they are, and based on their targets. And all the big tech companies all have targets as to when they will go carbon neutral and so on. So I think, and then I think customers will, investors will. I mean, when you and I cast around for what should our themes be for 2021, ESG came up time and time again. It's going to be, it's not yet, but I would have thought by the end of 2021, people really have to have a plan.
Yeah, I mean, it's a regulatory requirement, and it's all over the governance. I mean, I did a non-exec director's diploma this year, and it's a big part of that is what are people reporting on it and actually genuinely doing. But Robin, you mentioned in sort of investment in passing there. You found a kind of interesting technique for winning new business when you've been taking people for walks around Hyde Park, and I haven't heard this directly from somebody, but are you sort of walking them around Hyde Park until they basically give in and sign the deal? Is that your new strategy for working with people?
Well, I don't know what it was, but for several months I wasn't making much progress in persuading people of the value of corporate membership. And I wondered whether, my techniques for what they are were best face to face. So I took to meeting people at Marble Arch Tube at 5 o'clock in the evenings, even during lockdown, and then walking around Hyde Park. It takes an hour to get around Hyde Park. And if they hadn't signed a deal by the end of the first hour, then I started again. That worked for most people. But then unfortunately, there's lots of good pubs on the north side of the park there. Where we were able to go and we were a bit thirsty by then. So, and I'm still doing those. So I now do them from Embankment. I have sort of advisory meetings that start from Embankment and end at Borough, and then come back again. It means I can combine my exercise with looking after the future interests of InsTech London.
That's great. It's very Steve Jobs like that as well. So, and of course, we're very grateful for Holly and Simon's support, when we get the clients on board, now to sort of look after them as well. I mean, I would say we've doubled down on our investment in looking after people, because as we all know, you can sort of sell somebody in a concept, but actually if you can't deliver on it, then a year later, they're kind of not really interested. But, we've been delighted for all the support we've had with people coming back and actually asking for more. I mean, we couldn't have done 26 events this year if we hadn't had people supporting us from it, and actually Bold Accounts being really pleased with who turned up and the introductions and things they got on the back of it. So yes, what starts with the walk around Hyde Park ends up somewhere much bigger and broader and ends up broadcasting to the world. So yeah, great place to start.
No, I think I look back on the sort of shambling amateur organisation that was 5 years ago, and I don't recognise very much. I'm talking of global reach. Your podcasts are doing incredibly well. They're still an absolute highlight. Every time I talk to someone, I think, I know you guys. I listen to Matthew's podcast. Have you got any metrics for us? How have they performed this year?
Yeah, we've doubled the downloads since last year, and we're just about to release our next quarterly leaderboard. And as we saw yesterday, Robin, when we looked at the report on what is spiking of interest in our website. Well, first of all, what's interesting is actually people are going to the website and actually reading, the great Q&A that we produce alongside for the podcast. So people who, don't have time or don't want to listen to podcasts and want the highlights can get that. And we're getting hundreds of people reading them. But also we saw the spike was when we produce our leaderboard, we get a lot of people going on to the site to see where they are in the leaderboard. So clearly, even for the 15 people we put in the leaderboard, there's a lot of interest from those. But you also came across a really interesting statistic. We are the not just the top insurance podcast, but the top technical podcast in one country in the world, aren't we?
That was one of my highlights of the year. We had an email in from someone who'd been doing Google Analytics to tell us that in case we didn't know, that we are the third most downloaded technology podcast in Azerbaijan. I've no idea. We haven't done the metrics on how many downloads that represented. I think that says a lot for the quality of the technology and infrastructure in Azerbaijan, probably. But Who knew? I mean, I knew we had a global audience, but I a fan club in Azerbaijan. No, I didn't see that coming.
No, I'll take it. But just, as we kind of bring this to a close, what other high points are there for the year from you?
I've been banging on about the need to get digital for 20 years. It's partly the circumstances in which we find ourselves, but I don't want to overdo the effects of the word that I can't mention. But I really see things happening now. I mean, if I could identify one thing that fills my heart with joy, it's seeing companies like Parcel with these completely new models, which are device and IoT orientated, using all these technologies that you and I have been trying to promote over the years. I see Shepherd, doing great things in the commercial property world. Again, by the way, driven by ESG, because they're as good at reducing the energy usage and optimizing the efficiency of the building as they are at insuring and risk mitigating. And then you look at Consiris, who've made huge headway this year in IoT related and sort of data related marine insurance. Lots of people, or several people now providing hull war insurance automatically. As soon as you go into a zone, you get your insurance and you get pinged for a premium. Those things which have been talked about, 3 or 4 years, are starting to embed themselves in the mainstream. Not everyone will use them, but they are being used, and people can't any longer hide from the fact there's some sort of insurtech bedsit driven thesis. Insurtech is coming of age such that we don't really even need to talk about insurtech anymore. I mean, I feel like innovation is no longer a startup's game, probably.
Yeah, we've won the battle, I think, to a certain extent. I mean, if in a sense that word doesn't exist anymore, it sort of implies it's just mainstream, and that's actually should be a good thing. My high point is there's lots of examples of this, but thematically, I see a much clearer distance between those that get it and move fast. There's some of the organizations you've mentioned, but also I'd add someone like Parametrics Insurance or Blink. I mean, by chance they happen to be parametric, but who you built a concept, delivered against it. Blink have actually tapped into the new world of open banking data to figure out where businesses are not generating revenue and make a payment on that. Parametrics Insurance in 18 months stood up a way of providing insurance for network downtime, just moving really fast and working with partners who actually get it. And I think your point about Cora earlier on, they've got, I think, 7 mainstream insurers backing them because they just get it. And they've been looking around, and when they see something they know is going to work, they do it. And I think both you and I have had experience, and fortunately it's moving in the right direction, of organizations of all shapes and sizes who see what we're doing and get it and support us. And some surprisingly don't and think they can carry on doing it the old-fashioned way. And sadly, a few of those have fallen by the wayside. So I think thematically, things are moving much faster now than they were 12 months ago. And people are getting confidence by things that work. So that's our high points. How about the low points, or the low points that we're willing to share in public?
My single worst 45 minutes was indisputably my Q&A with Serge Correll at WACAM, where I asked him to kind of tell us about WACAM and where it was going on a Zoom call, which I was going to record and turn into a Q&A, and I did the whole thing and then I forgot to record it. So I've kind of managed to rescue something from my memory and some very notes that were shared with me, but my heart went cold and I knew then that I'd been a complete idiot. That was my low point by miles.
Well, I think you salvaged it with a great report, which people like, and and also such a great another example of an organisation that is evolved and moved fast and providing different types of insurance, and a delight to work with. So I think you got away with that one.
Come on, what's yours? Well, a consummate professional podcaster.
Yeah, I know, exactly. So you set yourself on a pinnacle and then you can just fail. So mine was when I was staying with my mother, where it turned out, I didn't know at the time, but her Wi-Fi was a bit shaky and we were doing an event, and normally I'm very careful to unplug the telephones. This time I'd forgotten to unplug a telephone. Telephone went off. She walked behind me, unplugged, answered the phone, and then fortunately the Wi-Fi went down. But we recovered from it, and it was a successful event. And I think sometimes you just got to be a bit human on these things and just roll with it. Frankly, I guess if we're going to be releasing this podcast the 27th of December, so I don't think anyone's going to be listening to it, Robin. So we're probably fine if it doesn't record. It's been a good conversation, but no, otherwise you just got to make the best shot. And we do. We're very grateful for Arena working behind the scenes as well, and Pete with the editing to make the stuff work well. There's been, frankly, so much bad content out there that I think we've all got to work hard and keep working hard to make it original and fresh and high quality.
I think that's a good place to end it. I mean, I think for 2021, all of us in the world of creating virtual events, and that we have to have a rethink. And I think that we'll be judged in 2021 by how good our ideas are and how we can refresh the pot in what we do, and let's back ourselves. Let's go out and do something weird and wacky in 2021. See what we can come up with.
Yeah, there's one thing we know it's going to be different. Well, I mean, you and I can carry on for a long time, but we should let our one listener go and put his or her feet up and relax and enjoy the rest of the break. Good. Well, we've got some great people coming up soon. You mentioned the predictions event, so we're actually going to produce that as the next podcast coming out, the highlights from the prediction event. So you'll get, anybody listening will get some fantastic insights into the year ahead and the year that's been.
And I'll just do I'll get on and work with my report. If you want to know what the future of e-trading and platforms is, coming soon.
Go and do your homework. Good. Okay.
Cheers, Matthew. Happy Christmas.
All right. You too. Well, congratulations for making it to the end. Now, you probably don't need to hear too much more from me, but just wanted to say, look out for the highlights of our predictions event, which is going to come next week. That was really excellent. And of course, as always, if you are an insurer and you've got some questions about what is going on in the world of innovation or who you should partner with, and you're interested in becoming a corporate member, then please do get in contact. Matthew Grant on LinkedIn or hello at InsTech London. And of course, we are also working with many of the leading technology firms, medium and large, some small. So if you want to share your stories and find your next clients, then also please do get in contact. With that, thank you very much for listening to us, and we look forward to speaking to you again and hopefully maybe even seeing you in the flesh in 2021.